Welcome back, everybody. We are here again with another video, and in today's video I will be discussing the easiest trading strategy that you could ever come up with. This is the forever model, as you guys already know, and it will be a AUDCAD trade breakdown. So let's just get right into it. So, like always, like I do in every single one of my videos, this is a blank daily chart with AUDCAD on the left and NZDCAD on the right. Now, before I show my annotations, I want you to mark up your chart just so that you can compare mine with what you have marked up on the next slide. So, if you have this properly marked off, like always, you guys know what step 1 and step 2 are in our entry model checklist. Step 1 is price reaching an internal range liquidity pool. And then step 2 is waiting for SMT divergence to occur inside of that internal range liquidity pool. And as you can see, we have a higher low on AUDCAD and a lower low on NZDCAD. But one thing to note here is when you're looking for this model to play out, all you need is one of the pairs of the correlated assets to reach an internal range liquidity pool. You do not need both. Understand that, and that's how you'll actually be able to identify this model more frequently. So we have the higher low inside of the internal range liquidity pool on AUDCAD, and we have a lower low taking out an external range low on NZDCAD. So now that we have step 1 and step 2 marked off on our checklist, we can now move to our aligned time frame. So we're going from the daily internal range liquidity pool, framing an hourly market maker buy model off of that internal range tag. I have the hourly chart marked off here with AUDCAD on the left and NZDCAD on the right. Now, I want you to focus on price inside of this fractal here. This is the tag of that daily gap. So what are we looking for next to occur? We want to see a change in state of delivery occur on the aligned time frame when we're looking for our entry points. So a change in state of delivery is price closing above a down close candle that tags the internal range liquidity pool on the higher time frame and also creates higher time frame SMT. I want you to look a little bit more closer and check even the corresponding lows on NZDCAD and AUDCAD on the hourly inside of this fractal here and this fractal here. Note this, we made a higher low again on AUDCAD and a lower low again on NZDCAD. So what we did here is we have price create a long-term low here. We generated and engineered more liquidity. We had a short-term low that gets violated that creates more SMT. So now we can utilize this as an intermediate term low that creates SMT while still being inside of that daily internal range liquidity pool. So we can utilize this candle as our candle that we would reference for a change in state of delivery and an order block. So what we would need to happen here is price needs to close above this body high of that down close candle. And then that would actually confirm the CSD and make this down close candle here a change in state of delivery and a high probability bullish order block that we could utilize as an entry point. And what do we have here in the next slide? We have the next candle on the hourly chart closing above that body high. So now I have confirmation that we have a change in state of delivery. We have a high probability bullish order block that we could utilize as an entry. So what we would do here is we would execute off of that order block, put an entry point for a long position at the body high, stop loss at the low, and simply just target a 1 to 2 risk to reward. And this is exactly what it would look like in the live market action. And you can see how sensitive this area in price is when price comes down and taps it. It's an immediate reaction because price runs liquidity, creates SMT on the intermediate term time frame while also creating SMT on the higher time frame. And I want you to also notice this. When you're looking for these executions, these are always during kill zones. And that's what's very crucial because it's always time before price. Whenever I'm looking for trades and anytime that I'm looking to execute live in these markets, it's either during Asia session, which is from 8 p.m. to 11 p.m., which is my entry time frame window when I'm looking to trade Asia, or I'm looking to enter from 8 a.m. to 11:30 p.m. Eastern Standard Time if I'm trading anything in FX. That is my entry time frame that I'm looking to execute when I'm taking any positions that are on the intermediate term perspective for swing trades. And this was at exactly past the open of Asia at 8 p.m. Eastern Standard Time, and the entry point was at the 9 p.m. Eastern Standard Time inside of the Asia kill zone. So I'm respecting time, and then price because structure is aligning itself with the draw and liquidity. And this is my stop loss here, and just simply targeting a 1 to 2 off of that daily internal range liquidity pool. And as you can see, price then, after we expand during Asia, we consolidate in London, we sweep again, tapping the order block again. Notice how sensitive it is on this area in price. We take profit at a 1 to 2 risk to reward. You could either do one of two things. You could take off the full position at 1 to 2, or you can take off 80% of the position and then leave 20% running to the external range targets. And this is the alert that I called out in my Discord. You can see I noted the order block with my entry point, said 1 to 2 risk to reward on AUDCAD, daily internal range liquidity with SMT divergence with NZD-CAD. This is my execution. I executed again. I took off 80% of my position here, and then I just have my position running risk-free from that point on. But like I said, I hope you guys can understand how simplistic this process is when it comes to executions. It is very structured, very systematic, and I'm looking for only 5 things, the 5-step process. Step 1, price needs to reach an internal range liquidity pool. Step 2, price needs to have SMT divergence inside of that internal range liquidity pool. And then that step 1 and 2 are your foundations to then waiting to go to your execution time frame, because if step 1 and 2 don't happen, you don't do anything. So if step 1 and 2 happen, you can then drop to your execution aligned time frame, wait for that change in state of delivery. And once you get the change in state of delivery, you can utilize that order block that tags the higher time frame key level, execute off of that order block, put your stop loss at the low, and TP at 1 to 2, either close fully at 1 to 2, or you close 80% at 1 to 2, leave 20% running risk-free to the external range targets. 2 options. But very simplistic approach. I believe that this is one of the easiest models you could learn. Very direct. I've provided so many examples, and I do so many different classes and workshops within the Discord. So if you are interested in that, I will provide the link to join that in the description of this video. But like always, I hope you guys enjoyed, and I will catch you guys again next week in the next upload.